And we are monitoring the auto stocks. Matt was referencing this before the break, the fact that we saw Ford shares spike on a report from the Associated Press saying the UAW appears to be moving closer to a tentative contract agreement with Ford. A Ford deal that could potentially include cost of living pay increases that could potentially, Matt, lift the total pay raises above 30%. That report also saying that the union made a counteroffer to Ford that proposes a 25% general wage increase over the life of the new 4-year contract. We'll have to continue to monitor some of those headlines, but obviously everybody's been waiting to see some traction on the conversations between the automakers and the union.
Yeah, absolutely. I mean, they've gotten pretty far in terms of the pay part of the package, it seems, right? Everybody's up around 20 to 23%. Reportedly, the union wants something like 25%. So that seems like they're close enough to done. My questions remain on the possibility of bringing back pensions. Seems terribly unlikely. The possibility of a 4-day work week. Remember, that was one of Sean Fain's demands. And I mean, why not make it a 4-hour work week, really, right? Let's bring in Keith Naughton from Detroit. He joins us right now on the phone. He covers Ford and all the car makers for us. Keith, does this look like it's about to get done?
That's a little unclear, Matt. You know, what the AP has reported is that it's getting closer, but our readers have known since last Friday that the union was asking for a 25% pay increase versus the 23% that Ford, GM, and Stellantis have already offered. And, of course, we've known that they are restoring the cost of living that was that they stopped giving during the Great Recession about 14 years ago. So those two things combined do get you over the 30%, which, as we previously reported, is the magic number for the union. So in that regard, if, you know, they can get Ford to move up to 25%, that would get them over the 30% that had been their target, and we could be close to a deal. But it's unclear that Ford is going up to 25%. That's just what the union is asking, and Ford said it was at its limit when it offered the 23% wage increase.
Keith, one of the things that you've been reporting on as well this week is some of the additional UAW strike action, and obviously that strike action has included focus on more profitable facilities for some of the automakers. How do we know, or what do we know at least, about how those actions may be helping to bring progress to the overall conversation, or if at all?
Yeah, and, you know, UAW President Sean Fain is really turning the screws to the companies by taking out their most profitable plants. This week we saw GM's Arlington, Texas plant go down. That's a big SUV plant. That's a money machine. And Stellantis's Ram pickup truck plant also going down. These are the most profitable plants for those companies. Ford's most profitable plant, its Kentucky truck plant, went down back on October 11th. So they've had the most sustained pain in losing big money makers, the largest F-Series pickup trucks and the biggest SUVs that they make. So those things are increasing the pain on the companies and presumably increasing their motivation to settle.
What are we going to see in terms of the damage done to these automakers? You know, when we look back, Keith, next year at the revenue line, for example, of GM, Ford, Stellantis, are they going to take a big hit because of this strike?
Well, the immediate damage, Matt, is estimated to be over $2 billion in lost earnings between the three of them. At Ford, it's estimated to be about $888 million coming into this week. But that's the immediate damage. The longer-term question is, what does it do to their competitiveness? Does it drive their labor costs so high that they can't compete with Tesla?